Good morning, everybody. Hopefully, y'all are having a nice hump day. It's Wednesday, November 30th. Let's get this thing started. SPY was up in the pre-market right before 8:30, and then basically immediately, upon some economic data coming out, we ended up dropping back to where we had started. So I think there's basically zero change for SPY from yesterday. Let me pull up handy dandy Robinhood. Let me make sure that my stream is working correctly. Y'all can hear me, right? Type 1 in the chat if y'all can hear me. Tesla? Probably not going to be trading Tesla today, but right now I'm looking at SPY. Let me just double check that the stream is working. 1? Okay. Great. Thank y'all. All right. So, let me pull up Robinhood over here. Yesterday, I made a couple of trades. So I already have this Intuit put debit spread open, assuming that Intuit would be below 385 for their earnings report. They actually had a decent earnings report. If you scroll down to the bottom, they came in at 166 earnings per share, and the estimated was 122. So that was actually a pretty decent beat that we got out of Intuit. So I'm probably going to be exiting this trade first thing in the morning today. I would imagine that I'm up on it because you're going to get the IV crush, which is going to decrease the value for the options. And there's basically zero change for Intuit overnight after the earnings. So these, I would imagine they're probably going for like 150 to 180 if I had to guess. You are still pretty close to the 385 strike price, so I wouldn't, assign it like 220 or 250 in value, obviously. But if it does start to pull back with the rest of the market, then that would make this spread option a little bit more valuable. And another option that I opened, it looks like I actually closed the options that scared the crap out of me. The morning bell. Did not turn my sound down for that. Okay, so right now these spreads are going for 175. So basically what I had anticipated. Currently Intuit's trading at 379. 378.50, so it's coming down a little bit with the rest of the market, kind of like I assumed. I do want to keep tabs on SPY over here, so we're going to shrink this and make this a little bit more visible on the right side. And looks like opening bell or opening candle is green on the 5-minute chart. Got rejected at the 395.80 resistance, so we'll see if it passes. Then it's headed to 396.06. But these spreads really aren't changing much, I would imagine, just because the bid ask is stupid at negative 340, not even possible for a bid, and 560 at the ask. Like a bid should never be negative. That means that people are only selling this option. But what I like to do whenever you have this kind of thing is I like to check other brokers. So I have been using Aries to spot the bid-ask spreads. That way I can get a better price than what Robinhood is going to quote me for, because Robinhood is the worst whenever it comes to their bid-ask spreads. And basically the reason for that is because they take zero commissions. Because they take zero commissions, the market maker has to make money somehow, and the way that they make money is taking the difference between the bid and the ask. So, anyway, Intuit is a ticker INTU. It's trading at 377, so these options should be pretty valuable. We had 387.50 strike price and 385. So I'm going to go to the puts. We bought the 387.50, we sold the 385, and that one is going for 150 at the bid and 270 at the ask. So even Ares has a pretty wide bid ask on it right now. And usually first thing in the morning, that's going to be the case. Just because there's not a lot of traders, they're trying to kind of decide on what the option should be valued at. So during like the first usually 5-10 minutes, you're going to see very wide bid ask spreads. But we're going to wait a little bit. Maybe we wait 5 minutes. 9:35. Looks like the market topped out at that 396.06 level almost. Ended up pulling back. Let's see the volume coming into today compared to yesterday. Seems pretty, average, I guess. Maybe a little bit higher. So I did want to do a quick recap of the economic data that came out, and I actually gave this recap to the Discord first, but y'all will get to see it here in the live stream as well. And if you want to join the Discord, I will send the link right quickly to y'all. If we go to the main chat, create an invite, and never expiring. Whoops, that is not the right link. There we go. Oh, where the hell? Okay. So y'all can join the Discord. There is a free trial for the premium 1 week. And that's towards the bottom of it. Anyway, going to the morning recap that I had today. Markets were off to a slow start. There was basically zero change from yesterday's close. But we did have a little bit of a rally before 8:30, kind of like I was saying at the beginning of this live stream. And then we saw GDP coming in at 2.9% versus 2.7% was what was expected. That is up from 2.6% last quarter, I should have said, not last month, because this is a quarterly reading. And this means that the Fed's work in trying to cut consumer spending isn't really working out too well. We're still seeing a lot of growth in the economy, which is the opposite of what the Fed wants, right? The good piece of news, good for the Fed at least, was the ADP non-farm employment change. So this is how many jobs were added to non-farm employees. This came in at 127,000 versus 200,000 expected. So that was a huge miss. So that means that there's less hiring going on right now, which is exactly what the Fed wants to see. Their dual mandate is stable prices, so that's inflation, and then it's going to be jobs. So they want to see less people getting hired. That way you have a smaller gap between how many people are unemployed and how many job openings there are. That means that people can't negotiate higher wages. Whenever there's less jobs available. Whenever there's more jobs, then you can just job hop from place to place every couple of weeks and ask for a higher pay. So they're trying to kind of reel that back. I think the last time I checked, the wage inflation was like 4 to 5%, when it's usually between like 1 and 2%. So obviously a lot of new money coming into the market. Which is not what the Fed wants. The Fed wants to decrease the money supply throughout the economy, slow down the economy, because we've had a very hot last couple of years, basically. And because of that, that led to more people having more money in their pockets. And whenever you have more money buying the same amount of goods because their supply chains aren't getting any better, then you're going to have higher prices, inflation. It's very simple. Supply and demand. But anyway, and this was down majorly from last unemployment change at 239. So 127 versus 239 last month. So a lot less jobs being added into the market right now. And then finally, retail inventories came in at negative 0.4%. So that means that what's on the shelves at Target, Walmart, etc., is starting to come down. So before we were seeing the inventories piling up, and whenever there's, again, more supply, then the prices are going to come down because the businesses want to get rid of that excess inventory, right? So all of this is really just supply and demand. Even the job market is just supply and demand. If there's more supply of jobs for people to take, then they can just hop around and get higher wages. But anyway, I guess that would be demand for jobs too. Anyway. And then finally, we have two other big events today. We have the JOLTS job report coming out at 10 a.m., so that's probably going to be a pretty volatile event. And finally, we have Fed Chair Powell coming in and speaking at 1:30. Now, this live session is only going to be till 10:30. I will have another live session at 3 o'clock, so I'll probably give my recap on Powell's speech, but that is going to be in the Discord. So anyway, that's what's going on. Today, the macro news, the economic news. Let's go back to this Intuit spread, see if it's kind of simmered down a bit. Looks like the bid is at 160 on Aries. The ask is 150. Really, it should be the other way around. I'm not sure how that ends up happening, but let's see. Looks like SPY is pulling back to that 395.10 level. That's the last support that I have drawn up today. So we're going to have to come up with some more. So whenever I do support and resistance levels, I like to use what are known as candles of significance. I don't know if this is something that I came up with. I'm very doubtful on that. I'm not a very unique person. But basically, I'll take candles that are larger than other candles and then take the average of the open and closing price of that candle. This one's a little bit too close to the 395.10 level that I already have, but this candle sizable. So we're going to take the average of it. So it opened at 394.49, 394.49, closed at 393.56. We multiply that by a half or divide it by 2. And you get 394.02. So I would imagine if the last economic report coming out today at 10 a.m. comes in bad, we're probably going to go below that 394 level. So that's a trade I might be planning for later on today, assuming that SPY will be below that 394.02 mark. It's been a while since I've done any plain long options, so I might do that. I'm a very big fan of spreads, though, just because you know how much money you're going to make, you know how much money you're going to lose. So I typically stick to spread options. But this one I might be willing to take the risk of opening a long put, assuming that SPY is going to be below that 394 level. Currently it's trading at 395.20. Maybe we can try to open this when it hits, let's see. I want to open it closer to 10 a.m. So we got like 20 minutes till then, so I'm not going to rush this trade. But I will keep it on the back burner, hopefully remember it for later. But looks like the bid is 80 cents for the Into. Ask is 210. Sometimes you gotta hate spreads. Like, this is part of the reason why spread options are a pain in the ass, especially for a stock like Intuit, because it's so expensive. It makes it harder. It makes the liquidity that much tougher, basically. I'm gonna try to close them at 150. I doubt that it'll go through, but it's only 150 profit. Honestly, I think we hold this. Just wait for the bid ask to narrow itself. Somehow I'm up 6,000 today, and I'm not sure. Oh yeah, just a mistake. For credit spreads, do we have to wait until expiration in order to exit? No, you do not. So I'm actually making a video that I'll be posting not this coming Sunday, but the next coming Sunday. It's already recorded, edited, and it's going to outline how I exit spread options. But basically what I do is I'll set up price levels like you're seeing right here, and I'll base my exits either off of those. I'll base it on a time, so kind of like I was talking about earlier with the new economic data coming out at 10 a.m. I'll close it before then if, I think that could change the stock market. Or I will set what I call a mental probability. So what I think the chances of a trade working out or going against me are. It sounds like a bunch of Fugazi bullshit, but basically, I think in terms of numbers all the time. So I'm fairly decent at estimating what is the percent chance. And sometimes I can find a discrepancy between what the market is telling me. So if a spread is going for something like 50, actually, let's change that. If a debit spread is going for 40 cents, that means that the market is telling me there's a 40% chance of that spread working out, right? That's a debit spread. If it's a credit spread, then it would be 60%. You do 1 minus 40%, right? But if I think that there's a 70% chance that that spread option is going to work out, then I'm going to close a debit spread at 70 cents or 70% of a $1 spread. And if it's a credit spread, I'm going to close it at 30 cents. Okay? So 1 minus the 70% mental probability that I have. Obviously, I'm not always going to be right. And you have to, kind of keep that in the back of your mind too. You can't have one number that you're specifically married to. You can't have a mental probability that you're dead set on. Usually I'll actually have a range of numbers. So instead of set at 30%, I'll say there's a 20 to 30% chance. So I close a debit spread between 20 and 30 cents or a credit spread between 70 and 80 cents. Or, sorry, opposite way around. Yeah. Anyway. So let's see. Intuit. Yeah, these spread options just ain't doing it right now. 160 at the bid. I'll take 160 just to get out of this stupid spread, honestly. So I'm going to close the 3 of the ones that I have right now. Intuit's making its way back up with the rest of the market, so that's not ideal. The bid dropped to 140. This trade is just not great. Oh, great. I love two-factor authentication. All right. Yeah, I'm just going to close them at 140, call it quits on this. It didn't really go as I had expected, the earnings report, that is. Hi, Marcusa. I don't know why my freaking, hold on. Let me adjust. I can't see all the comments right now for some reason. There we go. I had accidentally zoomed into my browser. All right, so I think maybe we open the SPY put now, assuming that it's going to be below 394. Looks like we kind of topped out again. So I'm going to make that trade on another screen over here. And then I'll show you all the closing once I decide to close out of that. So my assumption is that it's going to be below 394.01 after the new economic data coming out, the JOLTS job report coming out. Actually, now that I think about it, I think that the JOLTS job report is going to come in better than what's expected, because the ADP non-farm employment came out better, quote unquote, better than expected. So I think that I don't think that we should play a put on it. I don't know though. I do think that it's going to be a very volatile event, so it could happen. Let me work this out though. Those Intuit spreads not closing for the life of me. Gotta love when that happens. Thank you, Robinhood, for your super wide bid-ask spreads. My expiration date, I don't want to cut it too short. I'm gonna say, I'm not gonna do a daily. I would rather, let's see, what other big news? I know we have some big news coming out tomorrow. We have more economic coming out tomorrow. So let's see what the economic calendar says, and I'll, oh, the spinning ball of death, gotta love it. Economic calendar. Okay, so for tomorrow we have PCE, so that's the big hitter. So I'm gonna set the expiration date to tomorrow. So today is the 30th, so tomorrow would be the 31st. So I'm gonna set the expiration for the 31st. It's gonna be a very cheap trade. I'm not gonna risk a lot just because I'm not super confident in the trade. So whenever I'm not confident in the trade, I'll base how much I put down based on how much money I'm willing to lose. And it looks like those Intuit spreads finally filled on me. But let's let me post that trade in the Discord. And then we'll move on to this. Then we'll move on to the SPY put that I want. All right, so let's go to my trade alerts. The screenshot that I just took. This is a closing options alert. Premium 101. Okay, just took profits on the into. Wait a minute. That don't look right. I had the wrong screenshot. There we go. This is what I need. Get rid of this attachment. Oh God, why are my screenshots not working today? Please. Why? I hate it when my freaking computer does this sometimes. Anyway, I'll just take a screenshot of the whole page. And to put debit spread expiring 12/2 at what was the price that we got him at 140 each. I'll type in the strike prices. 370, 387 and a half, 385. And that one I originally picked up for, I did not mean to post that screenshot, but it is what it is. So I sold one yesterday at 130. So I got a total of 130 plus 140 times 3, total of 550 to close over 4. Close them at 137 and a half each. Average close, I'll call it 1.37. Opened at, let's see, 104 each. So 137 minus 104, 33 times 4 spreads. $132 in profit. It's not what I expected, but the earnings also didn't go to expectations. So at least I'm profitable on it, and that's what matters, right? So at least we're out of that trade too. That's nice. Now let's work on the SPY put. So again, I'm assuming that it's going to be below 394, currently trading at 395.35, so there's not a lot of leg room to go down, but I am going to open that put anyway. So I'll make it over here. And it's going to be expiring tomorrow, December 1st. All right. That's pretty decent. Oh, I'm looking at calls. No wonder they're so cheap. Okay. The break evens for these just aren't that good, it seems like. Oh, tomorrow's not the 31st. We don't have a 31st in November. I'm dumb. Okay. Well, it looks like I'm going to have to overpay for this option, but I think I'll take it anyway. All right. Ooh, man. Come on. Okay. I'm going to get a better price than that. Thank God. All right. So open that long put option. So I'm assuming that SPY is going to go below that 394 mark. Relatively quick, hopefully. Would be nice, but I am also kind of banking on the Powell speech at 1:30 today, so maybe that'll play a role in this trade. So I'm going to write my analysis for it. But basically, I'm assuming that we're going to see some more volatility around the employment data coming out at 10 a.m. today, and then some volatility around Fed Chair Powell coming out and speaking at 1:30. So that's why we're opening this. And that one expires tomorrow, 12/1. Okay. New options alert. Premium. Okay. So if y'all join the Discord, you'll be able to see that if you sign up for the free trial. And then I'll show y'all when I close the trade. So, yeah, you can. Frank asked, take that win when you get it. Great job. Thank you. Yeah. One-on-one coaching. How much do I charge? So I charge $99 for 1 hour. I'll send you the Calendly link if you want to sign up for that. You can do it on your schedule. Basically, I'm available anytime between 11 a.m. and 8 p.m. Eastern Standard. After this live session, obviously, ends at 10:30, and then until about 8 p.m. And then I go to bed at like 9 because I'm an old man, and I like to wake up at 4 a.m. like a crazy man. Anyway, enough about my life. Where is my link? Okay, https calendly.com. Okay. All right. So you can use that link to sign up for it if you'd like. But yeah, $99 an hour. You can schedule it on your own basis. Looks like the put that we got not doing too hot yet. But we have the economic data dropping at 9:56, so I'm going to pull that up, economic calendar, just so we can have an eye on it. So it's the JOLTS job report. I think it's a new metric that they're using to find the difference between the job openings and the number of unemployed people. So again, the bigger that gap between the number of jobs available, if it's higher, and then the number of unemployed people, the more that people can negotiate their wages higher and higher. They can just job hop from place to place. That way, they can make more money. And that's not what the Fed wants, right? So the Fed is working against that. So if this number comes in very well, what is expected is 10.3 versus 10.7 last month. So say this comes in at 10.4, that might be seen as moderately bad. The market would probably sell off on that. And then I think basically no other major economic data. You have the home sales, but the markets don't really pay that much attention to home sales. And then again, you have Fed Chair Powell speaking at 1:30. So we'll see. We got a few more minutes until that starts. In the meantime, I'll pull up the Discord and we can chat, see if there's anything in the chat here. Yeah, it doesn't look like anybody's talking much. Did I link let me pin the Discord link. So the Discord link is pinned, so y'all can all join if you'd like. That way we can chat a little bit more, and even after this live session is over. But anyway, waiting on that economic data to come out. Let's check out the SPY. Currently trading at 395.21, so not any major changes from when we opened that put option. It is below that 395.27 level, and I'm hoping for it to come below that 394.02 level, so I'm going to set an alert with that. And I need to create an exit plan for it, so I'll take y'all through that. So planning to exit, hopefully, if SPY comes below 394.02 today. If it goes above 396.06, I would start to be a little bit concerned. So I'll create an alert with that drawing. So usually what I'll do is I'll set up like 3 to 4 price levels. And then right now it's trading at 395.32. So I'm assuming that it's going to come down 2 price levels. So if this trade goes against me, then I want to have 2 price levels up from where it's trading right now. So 396 is the mark that I would look to close out of this for a loss. And then 394.02 is where I would want to take a profit. But yeah, that data is about to drop in about 20 seconds. So let me send y'all the link for this again. I'm not sure if it's in the chat or not. So y'all will have the same access as I do to this. Let me grab some water before I dehydrate. Okay. All right, the economic data should have dropped for the ADP, or not ADP, employment change. It should be the JOLTS job openings came in at 10.33 versus 10.3 expected, so not really a major change there, but you are starting to see a sell-off immediately on that news. So let me check out the SPY put that I ended up buying. Hopefully that's profitable at this point. Yeah, so I bought the 399 put. Again, not going to close it yet. I'm waiting for that 394.04 level, and it seems like we might hit that pretty damn quickly. 394.02 level. So that's my exit plan. Looks like we're going to hit it almost right away. And I ended up buying this at 508. It's going for 540, 550 right now. Looks like we bounced a little bit. I don't think that was that bad of a report since it came in basically at expectations. So I don't know if we reached that 394.02 level. Currently trading at 394.60, so it's not far from the mark. It's kind of trading in the halfway point, so we'll draw up the halfway point. And that could act as a resistance now since it's below that. 395.1 plus 394.02. Divide that by 2 or multiply it by a half, and you get 394.56. So that's going to be a new resistance level if SPY does continue to pull on back. And this is also going to be a new support or resistance level with this large candle that it's creating right now. So 394.56, I think it was. Oh, my computer's being a little bit slow on me. Please don't be slow. Yeah, 394.56. So now that's probably going to act as a support. I think I want to call it quits. Again, it wasn't that bad of a report to me. Y'all might interpret it a little bit different, but I'll try to close this at 550. 555 maybe? Come on. So it's only like $50 a profit, nothing major. Cool. So I'm out of that trade. Super easy. Didn't take much effort, but I made a little $50. Enough to buy us lunch in this inflation. Let me see. Closing options alerts. Freemium. Just took profits on the 399 SPY put expiring 12/1 at 555. Originally opened at 508 for 555 minus 508, $47 in profit. Not too bad. I'll take it. And it looks like we're not going to reach that 394 level. Again, I thought it was pretty decent data that just came out. Yeah, you can PM me on Discord and send me what you want to talk about, and we can work that out. But what else we got, man? Yeah, I think we're gonna stay above that 394 level now, just considering we didn't reach it. So I might make a trade based on that. The only thing that I would consider is the Powell speech at 1:30. I would be a little bit worried on him kind of, shaking up the market. So I'm going to wait for it to come down to that 394.56 level if it does again. And then I'm going to do a trade assuming that it's going to be bullish or neutral, staying above that 394 mark. So that would be a put credit spread that I would be opening. So let me work on opening that one. That one's going to be a day trade expiring today. Since my assumption is that we're probably going to trade flat today. Not super confident on it, so I'm going to base it based on how much money I'm okay with losing. And these spreads are paying damn well. So that helps. I might actually reduce the price level I assume that it's going to stay above, just because of the risk reward is so damn good. Yeah, even the risk reward if you go down one strike price is perfectly fine with me. And this trade, again, I'm not super confident on it, so I'm going to base the size of it on how much money I'm okay with losing. What are the chances of a 50 basis point versus a 75? I'll talk about that after I open this trade. Give me 1 second. We'll talk about that. Okay, let's wait for it to hit that 394.56 level to see if it does hit that level first. Because that way, if we wait for it to come down a little bit more, then we'll get more credit. So it's part of, timing. Obviously, timing the market's very difficult. But, having a little bit more patience can pay off sometimes. So, yeah, it's close enough to that level, so I'm going to open it now. Hopefully it gets filled on me. Knock on wood. Yes, sweet. So, just open to put credit spread. Assuming that we're going to be trading either flat, maybe up today. Posting that in the Discord right now. New options alert. So this one's a day trade. make sure that I got my credit right. 272 over 8, 34 cents each. Okay. Jolt's job openings came in at expectations, but markets dropped immediately on release, and I think that SPY will hold the bottom price at 394.25 until Powell speaks at 1:30 p.m. Planning to close this trade before Powell's speech. If SPY goes below 394.02, or if SPY goes above 395.8. Gotta love caps lock. So I'm going to lower this price alert to 395.8, and hopefully get out of the trade on the upside here. So crosses above this price level. So the nice thing about Thinkorswim is that they send you like text alerts, so I don't even have to be at my screen, which is really nice. Yeah, SPX does expire every day now, which is very nice, especially when you have Tuesday and Thursday data. I really love the 5-day expiration dates. I can gamble any day of the week now. Let's see. So somebody asked, MC asked, what are the chances of 50 versus 75 basis point? I'm going to pull up what is known as the FOMC countdown tool. This is from the CME group. And for December, we have a 67.5% chance of a 50 basis point. So right now we're at 375 to 400. So there's a 67% chance that we're going to go to 425 to 450. So it's a 50-cent difference, or a 50-point difference, basis point difference. And then there's a 32.5% chance that we go 75, which is actually kind of interesting because this is down pretty majorly from just a week ago. It was 75% chance of the 50 basis point and then 24% chance. So there was about a 10% drop in the 50 basis point odds. So maybe that's kind of why the markets are reacting so negatively at the moment. And another way that you can kind of gauge this is by looking at, I think it's ZQZ22. So this is the Fed futures for December. I'm not entirely sure how to read this, honestly. But I think when it's going up, then there's a better chance of 50 basis point. And then when it's headed down, there's a better chance of 75. Somebody might be able to verify that for me, but I'm not too skilled at using this on Thinkorswim. I've mostly just used this right here, and I'll link this in the chat. I think I already linked it, actually. Super useful in seeing what are the odds of 50 basis point and 75. And what's interesting is the markets have gone up a lot on the idea that we're going to get 50 basis point. And whenever the markets are going up, that's exactly what the Fed doesn't want, right? The Fed wants to decrease the money supply. They want to cool off the market, decrease speculation. And whenever the markets rally like 10%, like we saw over the last month, that is not a tight financial condition that the Fed wants. So what's interesting about this, if we do have the 50 basis point rate hike in the bag, so say this is at the same point that it's at right now, the Fed usually does whatever the futures right here tell it to do, right? So if there's a 67% chance of 50 basis point, the Fed is going to follow that. They've done that for the last, I want to say 60 to 80 years. They've followed whatever the Fed futures told them. But I think that December could be the first time in about 80 years that they go against the Fed futures. And if that happens, this is a theory that I've been coming up with over the last, I think, month or so, after Fed Chair Powell spoke at the last meeting, to where basically he said that they're open to the idea of doing a 50 basis point hike, but they need to start seeing the data showing them that they can do that 50 basis point hike, right? MCS, is there a way to get historical data on 50 versus 75, see how the trend has changed over the past month? I'm not too sure on that. But what I was getting at was Fed Chair Powell said that 50 basis point is on the table, but with the market going up 10%, I think that it's less likely that that's going to happen. There's a lot of spending going on. Obviously, we saw GDP coming in very hot, so we don't exactly have tight financial conditions, which is the goal of the Fed right now, to tighten financial conditions to reduce inflation. And whenever you have the stock market going up, you have the idea that people are wealthy, so they're willing to spend more money. And then when people feel poor, obviously they're going to spend less money, or they end up buying lottery tickets and trading options, like myself. Anyway, are you a day trader? Yeah, I do both. Swing and day trading. I swung into put debit spreads from Monday, I think. I opened those on Monday, if I remember right. But yeah. Anyway, we've got about 15 minutes left, so I don't think that I'm gonna make any more trades, but I am gonna type in my trades into my nice little spreadsheet, which I actually updated yesterday. So this is also available in the premium Discord once you sign up for it. Let's see. And it looks like we only got 10 likes and 34 viewers. So if we can get those likes up to like 30, that would be great before we hop off of this session. But I'm going to show you how I import all of my trading data. So for October, I lost a crap ton of money. Just to be transparent here, I lost $8,000 from options that expired versus $4,000 from options I closed myself. And at the end of the month, I was down $4,000. For the month of November, so far, I made $741. First couple of weeks didn't do too hot, but the last few weeks I've been really focused on these exit plans that I've been talking about a lot in these live streams and in my upcoming video. And this has helped me to be more consistently profitable. So I added this, which actually shows what days I'm profitable, what days I'm losing money. And over the last 3 weeks since I started using the exit plans, I've only had 2 negative days. So pretty good data so far. I don't think that it's conclusive just because it's only 3 weeks. But hopefully, that trend does continue. Nice discussions. Thank you, Bumblebee. Why did I let those options expire? Because of my stubbornness. So over the last really couple of months, I've been working on trying to be more open-minded. And I've done it through various different ways. Like the exit plans is just one way that I've tried to be more open-minded, but be more reactive to data. So or news. So if a Fed member comes out and says that, financial risk is increasing, that's a bullish thing. And last week or the week before, I was saying that's kind of a reckless thing. I thought that was a very reckless thing of the Fed to say, but the right mindset would have been me saying, okay, this is what they said. Let's interpret that, and how is the market going to react to that? And the market reacted really well to that. So you have to be open-minded to everything. You can't be narrowly focused on your own kind of view on the market, because the market is made up of a bunch of different perspectives. It's not just your perspective, right? So you have to be open-minded to others' perspectives. But yeah. So for the month of November, I'm going to type in the trades that I've closed today. So I like to do this on the Discord. I pull the information from my Discord. New options alert. So I think I opened just one option today, if I remember right. So actually two options: the SPY put and then that credit spread that I opened earlier. So I'm going to type in today's date, SPY. This is a put credit spread. This is a bullish / neutral trading. Sorry, that's not bullish. I was thinking of... Sorry, I typed in the wrong... This was a long put that I bought. And this is a bearish strategy. Expiration date was tomorrow, 12/1. And so that had 1 day to expiration. The strike price that I chose was $3.99. I bought just one of them because I can't afford a lot. And I paid $5.08, and I closed that at $5.55. Surprised that I remembered that, but my memory is pretty good today. And let's see. And then I opened a SPY put credit spread. That one expires today. This is a bullish / neutral trading. Since I'm assuming that it's either going to trade up or trade flat above a specific price that it's currently trading above. That one expires today, 11:30. And my strike prices for that one, let's see, $3.93, $3.92. So I went long on the $3.92 put, short on the $3.93. I opened just 8 of those. I didn't want to risk a lot of money, so I based it on how much money I was okay with losing. And my credit on those was 34 each. So that means I can make up to around 8 times 34. 8 times 34. I can make up to around $300. But we'll see. Let me check out the SPY charts right quickly, see where we're trading at. The spreads are down right now, but yeah, it looks like SPY is heading on down at the moment. If it comes below that 394.02 mark, again, I'm closing out at a loss. Just sticking by, my exit strategy. That's what's worked out for me over the last few weeks. We're going to see if that continues to work. I will take a loss on it, obviously, but I wasn't super confident in this trade, so I didn't put a lot of money on it. Anyway, and then I closed a couple other trades. So the Intuit spreads I closed today, and I closed those at, that one I don't remember. I closed them at 140, 3 of them, and then plus 130, total of 550 over 4. Close them at 137 each. 137. And I think I had one more that I closed today. Yeah. The Intuit spreads I actually closed. Yeah. Okay, let me make sure all of this is the same size, just for neatness sake. So far this week I've made $699. Last couple weeks I made $1,100 and $1,200. So it's been a good few weeks since I started using the exit plans. SPY's currently trading at 394.20, so it's getting very close to my 394 exit. Hopefully we end up bouncing, but it looks like markets are pulling back some more at the moment. So let's see if there's any news that might change my mind. No, last piece of news was the JOLTS job report. I'm going to check on investing.com. And that will be it for today. So let's check the news. U.S. stocks wobble on mixed economic data ahead of the Powell speech that's at 1:30 today. And I'm planning to get out of this trade again before he speaks at 1:30. So that's part of the exit plan too. Let's see. The most popular news, we have oil up over $2 on tighter supply with OPEC talking limit gains. Gotta love OPEC. The cartel of oil. Anyway, I did want to check on oil actually. Yeah, it's trading at $80 per barrel for sweet crude. So definitely on its way up. Another reason why it's probably going up today is because of the dollar coming down, down 0.09% for UUP, which is a derivative of the dollar. But looks like that TLT Iron Condor is also doing pretty well. Let me check on that, and that will be the last thing we do today. So let's go to Robinhood. This one's up 180. They're going for 14 cents a piece. So I'm up $180 on it. I opened 45 of them at 18 cents. So I can still make another 45 times 14, $630 as long as it stays between my strike prices. I might consider closing part of the strategy. Yeah, I think I'm going to close just to reduce my risk because this is a crap ton of risk that I'm taking on, right? So it's 45 times 1 minus 100 minus 18. I'm risking $3,600 for this trade, which is a lot more than my usual trade. But I based a trade on how much money I wanted to make. And I thought this was worth, 45 times the 18 cents of credit that I got, or $18. I thought it was worth $810. Still think that it's worth probably $600. So I'm going to reduce my risk, cut this trade by, I guess, a quarter, and sell 10 of these spreads, or close 10 of these spreads. I'll try them at 15. Yeah, so that trade went through. Now I only have 35 spreads instead of 45, so I'm reducing my risk accordingly, and I'll post that over in the Discord. All right, so closing options alert, premium 101. Okay. Took profits on 10 of 45. Strike prices were, let's see, 96.97 to 106.107 strike prices. TLT IC for Iron Condor expiring 12/9. The only reason that I'm kind of worried about it is just because we have another week until expiration. That extra week and the enhanced volatility that we've been seeing for the bond market is a little bit worrying, so I think it's best to reduce our risk on this. But yeah, that's the end of the live session today, and I will catch y'all tomorrow at 9:30. See you, everybody.